Good evening to all of you. Welcome you to today's webinar. Today our discussion is going to be on the simple bar charts and candlestick charts, how to use that for trading. Now this we are going to show illustration in Nifty and Bank Nifty and some stocks. This is part 1. Part 2 will also apply to commodities as well as to other stocks, basically for investment, big investment decisions. That we will have it on Friday. So today we are going to look at how do we use the bar charts and also some simple moving average and MACD to identify top and bottoms. Okay, because a lot of the questions arise, can't we get near, at least very close to the bottom, or can we get closer to the top in case if the trend is falling down. So we will now look at the how to use this bar charts as well as the simple pivot high, pivot lows in the bar charts as well as the candlesticks. So either one of that you can use it. So now this is the basics of any trading is that first is trend identification, right? Trend identification. First is trend identification. That is basically the time frame you have to choose depending on your comfort, because the time frame, if it could be day, one day, it could be for trading, it could be for week for investments, a week or month for investments, it could be based on 1 hour chart, it could be 15 minutes for intraday. Okay. Now this could also be used for positional trade, right? So first of all, this depends on your comfort, because it depends on the number of trades that you will have. Suppose if you are trading in a 15 minute chart every day, probably you will have at least 1 trade or 2 trades every day. If you are trading on 1 hour chart, probably the trend will be so good that you may end up even with 6 or 7 trades only in a month. Okay. So it depends on, suppose if you are looking at less number of trades and slightly wider stop losses, then you can go for 1 hour. So you will have less of choppiness. In the case of 15 minutes, you will have slightly more choppiness. Nevertheless, you will still be successful. Thus, whichever time frame that you choose, you should be very consistent with that particular time frame. Now, in the case of 15 minutes, you will get more trades. So whether you would like to take more trades or less trades. See, the question is the profit and loss, probably over a period of time it will get evened out in whether you do it in 15 minutes or in 1 hour. If that be the case, probably you can even think of 1 hour. But suppose if you feel that no, you would like to close positions on intraday itself and you do not want to carry the position, probably you can use 15 minutes chart, and at the maximum, if the overall situation is good, you can carry it overnight and then exit the trade probably the next day at some stage that will get exited. So you have to have a particular decision first on the time frame, whether you are going to be a 1 hour trader or a 15 minutes trader or a 1 day trader based on 1 day trend, based on a day trend, or based on a weekly trend. So first of all, you must choose the time frame. Then you must identify what is a trend. Okay, there could be so many ways where probably the trend can be identified. Some analysts, technical analysis, the basic tools they use is a moving average, and even before that, the very classic definition of any trend on which we had many webinars before also is the higher high and higher bottom. So higher tops, higher bottoms. So higher bottoms. So this is a classic case of an uptrend. Okay. Then you have a lower top, lower bottom, which is a downtrend. Okay. Somewhere in between could be a sideways move. So you need a higher top, higher bottom, lower top, lower bottom. Sometimes in order to jump the trade a little more quickly, we could probably have a lower top and higher bottom. So in this case also, if you get one of the combination also, generally the traders try to jump in that. So higher bottom you get, lower top still expecting the previous top to be broken, you can still go long. Okay. Similarly, the reverse applies for a downtrend. So one of these is generally used in time frames of 15 minutes, 1 hour, or daily. Okay. So we'll look at just an illustration in 15 minute chart. We will also look at the 1 minute chart. We will show some applications in Nifty, Bank Nifty. Then we will look at using moving average, MACD, and how to identify top and bottom. So this is the easiest and basic definition of a trend identification, because in any trading plan you need a trend identification. You have to choose the time frame, then you should decide to what extent probably your stop losses should be there, and also what is there, how do you take the profit, so and what type of tools, whether you are going to use futures or options. So these things will are the money management. So these things will define your complete your trading plan. So today what we are looking at is the trend identification methodology, and we are also going to show in 1 hour and 15 minutes today, and day after tomorrow we are going to show in a day and week for investment decisions. So now we will look at the Nifty Bank Nifty charts. So this is Nifty chart, and Nifty chart we have the 15-minute chart. So in the case of, I told you that no, you need a lower top, lower bottom for a trend identification, right? So if you look at this, this is a 15-minute chart, and I'm expanding this chart. So this is the trade which is happening on 19th. So I'm starting from here. Okay. Now let's say the next day. So here it is. Now this is till this time the trend is on the upside. What started from here, the trend is on the upside. Okay, we'll keep it like that. Now here if you see, this was one bottom, this is another top, right? So now we have a clear case where we have a breakdown. So this is a bottom. Okay, what is a bottom? A bottom means the previous bar low, this the bottom bar should have a low which is lower than the previous bar and also lower than the next bar, which is this bar. Okay, so the pivot low should have the low which is lower than the previous bar's low, which is also lower than the succeeding bar low. If that be the case, then this is called a pivot low. So this is a pivot low. Now this was broken. So when this was broken, that means a new bottom is getting formed. New bottom is getting formed. Now once you have got this, you don't have a lower top yet. Lower top yet. So some can jump saying that no, we will go short here itself. We will go short here itself because we have got a lower bottom. So one of the classifications happened, but we have no higher, there are no lower top yet. So when will the lower top come? So in the 15-minute chart, if you look at it, now it goes here, it goes here. Okay. After this, we see this particular bar. Okay. Now this bar, when it is broken, when the low is broken, then that means this has an high which is higher than the previous bar high, and this is high which is higher than the previous bar high, right? So once this is broken and this close happens, okay, this bar close happens in the 15-minute chart, we have a clear-cut case that a lower top is also there, the lower bottom is also there, because a lower bottom because of this, okay, a lower top because of this, okay. So you will go short somewhere on the breakdown of this, or probably on this bar, on this candlestick close bar. So now you have the trend going on the lower side. Okay. Now we have a trend which is what started the trend was it started at 18,485, and since then we have a complete breakdown which is happening here. No, it's there, it's there, it's there, it's there, it's there, it's there, it's there. Okay, fine. Now if it goes above this particular bar high, then that means we have a bottom here, then we don't have a proper bottom here yet. Okay, so it's a very difficult call to make. Probably we have a top here, so if that is broken, we will have a higher top. Okay, higher top, and the bottom is not a very clear bottom here. Okay, this bottom is not a very clear bottom here, so we need to probably wait for some more time to get a proper higher bottom for us to go for a long. Now if this eye is broken right now, then we will have a higher tops, and probably again bottom is not there, so we need to get higher bottom again, okay, which will be confirmed only on the succeeding price pattern development. Okay, so right now we are still maintaining on the short position from 18,485, and now it's 18,266. So we've got around 200 points or more than 200 points profit. This is based on the 15 minutes chart in Nifty. So this can be used either for intraday trading, or probably you can use it for whatever this one. If you want to carry the position, a short position might have been carried by you today. But these days, the general trend is on the upside, so you need to be very careful in taking short positions. So it is better that you keep closing it on a intraday basis itself. So today it happened that at 11 o'clock. So you have this one. This is a top. This is a top. So this is a lower top. And once this bottom is broken, you're getting a lower bottom. So you could have gone short today. Basically either on the breakdown of this, which is 18,370, or on this bar, which is 18,332, and you could have closed it somewhere here, okay, 15-20 minutes before, could have closed it. So maybe 72 points profit was there for you for intraday. So this is the way you use the 15-minute chart. Very straightforward, simple thing. It's not that probably any novice trader or who is now coming into trading, the first thing that one has to understand is how to use the bar chart for trend identification. Now, nevertheless, this is a very simple technique, but a very robust thing. So only from this, so many other indicators have been drawn up, and some are complicated, some are simple. So one best thing to understand is that you can trade comfortably, because any indicator or any chart or any pattern that you use, you just need to be consistent to make money. That's all. It's not that you should use a very sophisticated, robust tool for you to make money. You can use simple technique, but you have to be consistent. You don't need to be worried about the ratio of profits to loss. That doesn't matter. Question is that how much of profits that you make. That is most important. So let's not look at the number of trades of profits or loss, because sometimes in a 15-minute chart there can be some whipsaws, because you're going for a lower time frame. So a lower time frame will have more whipsaws. Okay. So the proportion of the number of trades of losses in a smaller time frame can be high, but nevertheless it can be overall still be profitable. Okay. So you can carry on to trade in this 15-minute chart. Now you look at the hourly chart here itself in this. So hourly chart, if you look, now we have this was a bottom. Okay. This on a spike low. This is one bottom, and this is a top. And once this bottom is broken, here it was broken. So once this is broken, we have a lower bottom, but we don't have a lower top. But once this happens, that is, once this particular high low is broken, that means if this low is broken, then in that case we have a very clear case that this is a high, because here this bar high is higher than the previous bar high, and this bar high is also higher than the previous bar high, next succeeding bar high. So this qualifies for a pivot high. So once this pivot high is made, and this is subsequently this low, this pivot high low is cut, in that case we are now having a confirmed downtrend in the hourly chart. And if in the hourly chart and all, if you wait for a close basis, it can probably much lower. So but anyway, for illustration, now this is coming at 18,313. The short was 18,313. So this particular thing, which right now that we got, confirms that we are in a downtrend. We are in a downtrend. Okay. Now at the same time, we would also like to know whether the downtrend is likely to end, and whether we should get on board at the earliest. So that is also always there in the back of the mind. So we will come to this after illustrating it in Bank Nifty of how to use a 15 minutes and 1 hour chart illustration. We will look at the Bank Nifty also. But before that, let's go to because of a very good trend in Nifty and Bank Nifty. Generally, we are getting very good result right now. We are getting good result. So the one advantage here is that in a smaller time frame, when you will be let us say in the 15 minutes or 1 hour, this one you got stopped out here, somewhere you got stopped out, let us say, or here you got stopped out. Now if this trend develops to be on the lower side for a substantial period, okay, then in that case you would have been happy that you use this smaller time frame, which is 1 hour chart, rather than a daily chart, because the daily chart, the stop losses are quite far off. The stop losses are quite far off. So in that particular case, you can't use a daily chart that easily. Now, you're out of the trade at 18,313. The high was 18,600 or so. So within 300 points at least you got out of the trade, assuming this develops into a mega downside. I'm not suggesting anything, but I'm saying that sometimes it can also have a steep fall. And those times you will be definitely thanking yourself for having used a 1 hour chart or a 15-minute chart, because the next day and all, if you see, there can be a major decline. So that way the 1 hour chart or 15-minute chart helps you to get out of the trade a little easily. But at the same time, too many trades also, probably, you will keep on missing the continuity, because if it starts rallying from 18,000 to 19,000, let us say, in a daily chart, you would have been there the entire 1,000 points without a problem. But in the case of an hourly chart or 15-minute chart, by getting in and getting out, there is a reasonable chance that you might have missed the entire 1,000 points move. So that is also possible. So, but anyway, for risk management, better to use a slightly smaller time frame in case of an explosive market like what is happening right now. So right now the markets are in a very big trend mode, but always kindling the fear that at any time anything can happen. So in that case, it is better to position our stop losses at a slightly lower time frame, because we are not getting a good stop loss in a daily time frame. So right now, if you look at this entire trade, we might have gone long somewhere here. So this would have been long. So probably would have got out here. Then we would have gone long about this place. Then probably would have got out of this. Then we would have gone long about this. And this trade, probably the last important trade that we might have, that is the trade that we entered somewhere here. I think the trade which we entered here, this trade at 17,827 got out 18,313. So in this particular trade, an hourly chart would have carried us straight away with the 500 points profit, And let us see how this develops how it develops in the future. So now with this, we look at the Bank Nifty also, how the Bank Nifty works in the hourly chart as well as in the 15-minute chart. So we go to the NSE Bank. So this is the NSE Bank in the 1 hour chart. So in the 1 hour chart right now, Bank Nifty is in a hourly chart time frame. This was a low and this was a top, and once this was broken, right? So this is broken. So this became a lower bottom, and once this particular low is broken here, where I am keeping the cursor, this becomes a top. So here this was the first signal, and the signal got confirmed with a lower bottom and lower top once this was broken. So this is 39,769. See, look at how very close to we are. The high has been 40,007, and we got stopped out at 39,769 and 800. So just a gap of 200 points, we have been able to exit out of the one important long position. And that important long position, we would have entered somewhere here. Okay, probably the last trade that we must have entered could have been here. Okay, could have been here, or probably if this is the case of cutting, so not much. Even then, assuming we got into the trade somewhere here, it is 38,102, and 38,102 it is 39,000. So 1,000 it carried us close to 1,750 to 1,800 points straight away. 1,800 points straight away. So this is the probably in a very good trade. That is, in always choppy markets we will have problems. Okay, but nevertheless, the sometimes markets can be choppy. Sometimes it can be in a big trend mode. So we need not be intelligent enough to make money. So we have to be only consistent. We have to be diligent, consistent, and emotionally balanced to make money in trading. Not necessarily we should be very intelligent and think that no, we should use much more powerful mega tools and all to make money. Okay, so this is a very simple bar chart, which can be used for us to look towards getting ourselves on board to make some money. Now we look at this 15-minute chart in Bank Nifty. So you have to think whether you are a 15-minute trader or 1 hour trader, depending on the number of trades that happens and the choppiness and the profit loss that it produces. Now, if you look at it, the markets are generally quite choppy. Say today, let us say this is today. So today, what happened is in a 15-minute chart, if you have traded, so here we have a bottom. This is a bottom because this comes higher bottom. There's no higher top, but this is a clear higher bottom. Let us say. Now, if this is the higher bottom, then you will wait for a breakout of this to happen. Okay, that is one way of looking at it. The alternate thing is that I told you that since this is the bottom and this is the bottom, so you got a higher bottom, not necessarily a higher top. You got a higher bottom. Because the higher bottom itself is formed, some traders take the trade on the long side because they are not looking for higher top, higher bottom. They are looking for only for higher bottoms in a bull market. So here they would have taken the trade at this place, and that low itself will be a stop loss. That means the trade would have been entered at 39,662.50 above, and a stop loss of 39,558 or 9. So probably an 100-point stop loss. Probably an 100-point stop loss in Bank Nifty would have been generated in this particular case. Of course, the trade got on the short side, on the long side, it was a loss. But what's this now? If you look at this, the same 15-minute chart, here you got a bottom. Okay, so this is a lower bottom. This is a lower bottom. So here they allow the market trade to rally, and once this particular bottom is broken, you're getting a lower top and a lower bottom, a lower top and a lower bottom, which means probably now you will be going for a short here. So what was a long which went here, 100-point stop loss got executed, and today you would have been short after that at 39,607, keeping 39,725 as stop loss, 110, 120 point stop loss again. But then it got good profit, and still the trade is running. So right now the 15-minute chart is as far as Bank Nifty is concerned, is in a downtrend. So on a 15-minute chart, you can say that the trade is still on the downside, and already there was a money in that. So either an intraday you could have taken profit, or probably you would have got stopped out. So today there were two trades in Bank Nifty. One trade was in the long side, got stopped out. Another trade was on the short side, which has made money. Put together, they got money. So two trades today. So in a 15-minute chart, if you do, good chance that you may go up to easily two trades in a day. If that is a cup of tea, then you can consider 15 minutes as far as Bank Nifty is concerned. Now let's look at the same thing as far as hourly chart is concerned. See, this is hourly chart. Okay. Now in the hourly chart, this is the low. As I told you, you could have gone short here, and no, still this is on a declining mode. So what was short here at 39,769 is still on the short position at 39,574. So in hourly chart also, Bank Nifty is in a downtrend. Okay, but we must remember that in a daily chart it is still on the upside. So whether you want to take short trades, I leave it to you, because since the hourly is in a daily trend, it is in a big bull mode. So it is better to avoid short trades. You could have exited a long trade and probably wait for the next trade to come. Okay, instead of trying to go for a short. Okay, but those who are going to short could have done that, but with very definite important thing is you should keep a stop loss. And probably considering that there are many gap ups these days, it is better not to carry a short position overnight in the present circumstances. Okay, so now it is but on a trend basis, if you return algo and send it's on a trend basis, and if you are not taking decision, the algo would have kept you in an hourly trend on the short side of the market. Okay, so this is the Bank Nifty as far as the short position is concerned. Now we come to finding out how to use a 20 and 50 moving average in some time frames to identify a bottom or a top. Okay, so that is another point which we said we will touch upon. So let's look at the Bank Nifty itself on a 15-minute chart. Okay, now we have drawn two moving averages. And one moving average is the 20-period moving average. This is the magenta line, and the yellow line is the 50-period period moving average on a 15-minute chart. Now, generally, the 50 period moving average defines the short-term trend. So, whether it's on a daily basis or whether it is in a hourly basis or a 15 minutes basis. The 20 is a even tighter stop losses, but 50 defines the trend, and 200 defines a mega trend, okay, in any particular time frame that you want to trade. So, in between 100 also comes. So, now let's look at this particular chart that we have at. This is a 20 and 50 minutes chart. Now, you can look at the 50 minutes chart, okay. Once it crossed below the 50 moving average, allow a pivot to be formed. Okay. Now, this is the pivot. This is a pivot, right? So, now, as I told you, why this is a pivot? This is a low pivot. Because the previous bar, this low is more than the previous bar low, and the low is also more in the sense it is lower. That is, the low is lower than the previous bar low, and the low is also lower than the succeeding bar low. That is why this is a pivot low. Now, if this pivot low again, after it is formed after the 50 moving average, and if the asset price or the market continues to slide below that pivot low, then it comes to be in the short position as far as the that particular stock or the asset is concerned. So, right now it will look that this is the place where probably you have to go short below 39,565. Now, how do you identify for a clear case of hitting it closer to the top in a selling position or in a buy position? Now, allow this, now there is a retracement, right? So, there is a retracement. Now, it falls down, then it is a retracement. Now, this retracement carries it back above the 50 moving average, right? It carries above the 50 moving average. Allow one pivot high to be formed. So, what do you mean by the pivot high? This pivot high means this high is greater than the previous high, and also this high is greater than the succeeding thing. So, that means at least this low has to be cut more or less. Of course, you have to wait for the close, but at least this low has to be cut first. Now, this low that has been cut, if it is cut, then in that case, this becomes, from this you can go for the short. So, that means you are closer to getting very closer to the top of the day, because once it started to fall, okay, in morning 9:45, 9:15 it opened, right? So, today what happened is, after 9:15, in a 15-minute chart, you look at this bar, it's going there, right? Allow it to come very closer to the 50 period average. Allow it to come closer to the 20 or 50 period. Better to come closer up to the 50 period moving average. Now, when it just crosses the 50 or just touches closer to that 50 period, if you just see the pivot high being formed, and the pivot high being formed in the case because the succeeding bar high is lower than the previous high, and the pivot high also has got a high which is greater than the previous bar high. If that be the case, the pivot high is formed. So, if a pivot high is formed after a 50 moving average period is crossed or closer to that, then in that case you go for a short. Now, look at this case. You shorted the market close to 39,611, and the high of the day was 39,772, right? So, you are very closer to the high of the day. Now, you look at the hourly moving average also now. Now, hourly moving average, we have not seen anything up to the 50 period average. Okay. So, let us say the Nifty comes very closer to 39,145, 146 levels, or slightly below 39,146. Then from there, we get a pivot bottom. Closer to the 50 moving average or below the 50 moving average, go for long. So, that would have given you the best possible entry. So, now you have to wait in a hourly moving average for it to drop very closer to the 50 moving average, and then you have to take the trade. Now, this is one illustration. See, here it just came below 50 moving average, right? This is a period where it came below the 50 moving average, and the pivot bottom is formed here. because of this bar, okay, or this bar, whatever it is. A pivot bar is formed. So in this particular case, you have to go long somewhere here and keep this as a stop loss. Keep this as a stop, because this particular low came below the 50 moving average and a pivot bottom has been formed. So that means this is a stop loss. This is a stop loss for a entry position. This is a stop loss for entry position. And ever since then you would have got very closer to the bottom. There is only one bar range, probably you may be missing, and then you would have got the entire thing on in a profitable mode. So now we will also look at the places where probably we would have got stopped out. See, this was the bar which came below the 50 moving average. Now we know that probably this bar, if this becomes a pivot low, it could be a very good place for a buy on dips, keeping this low as a stop loss, keeping this low as a stop loss. Okay. So now once this high was broken, you could have gone about the trade, long trade, or probably you could have waited for a dip to go for a long. Now nevertheless, this is a stop loss. Okay, this is a stop loss. So for some hours or for some days it was trading above, for some days it was trading above. Now again it went bit above this and it came here. If you see, it cut the 50 moving average and a pivot bottom was formed here. So now we have moved the stop loss from this place to this place. Okay, so any long trade in an hourly chart now will be carrying this particular stop loss. Will be carrying this particular stop loss. So now we will be entering the trade here. We will be entering the trade here. Okay, the short trade, or probably we will be entering the exiting the long trade. Exiting the long trade. So we have to wait for a bottom to be formed below the 50 moving average. Now that is how we illustrated last week. If you remember, we will now again highlight it on Friday. But on a daily basis, if you remember, we highlighted Tata Steel and ICICI scripts to be bought. Okay. Now I will just show you the same chart right now. Let's look at the ICICI chart on a daily basis. Why we illustrated that you should have gone long. And I'm going to put a daily trade. Okay. Now this is the day we spoke. Now this was a low which came below the 50 moving average. Okay, below the 50 moving average. And once this I was cut, this day I was cut, we said very clearly that ICICI now, because this particular I has been cut, this can be a bottom. So somewhere we were speaking around this place. Somewhere we were speaking around this place. So we said go long at the 700 levels, keeping this particular low, which is 687, as a stop loss. So you got a very, very small stop loss for a very big trade, and from 700 around that, it is now to 745, 750. So a very beautiful trade came. So you have to wait for a drop which is very closer to the 50 moving average. Okay, and then decide to go about in the long position. Okay. Now when we identified, we said the same thing with respect to Tata Steel. We will again look at all these things on Friday. So see, let's say they will be saying that no, it has gone below 50 moving average, so probably we should be looking for a short. Yes, but only after a pivot low has been cut. So wait for a 50 moving average, a close below 50 moving average, and then also wait for a pivot low to be formed below the 50 moving average. Now here is a case where you got a pivot. You got a pivot. So that means if this low is cut, then probably would have gone short. We could have gone short. But here, after coming here, once it started to rally above this day's high, this is a very clear low bottom. This has become a clear bottom. So once this is a clear bottom, we said no, we should go long on Tata Steel. So we were speaking about this, all those things closer to this 1270, 1280 levels. And then it has subsequently rallied to this place. It has subsequently rallied to this place of 14, 20, 24. Now there is some correction that is happening here. So there is some correction which is taking place here. And once this I is cut again, 1426, then it will be on the long side. Why we are saying this is, see, now it has gone above, it came below 50, now it has gone above 50 moving average, and it has formed a top there above the 50. Out the top, a pivot high has been made. How the pivot high has been made? So you just look at this high, look at this high, look at this high. So this is a pivot. This has become a pivot high. So now today, we could have gone probably exited the trade that we did here at around 1357, 1358, and we need to wait and see how things come, how things shape up now. So what long we would have gone above this particular place of 1296, we would have probably got out below 1357. So this is how you take your decisions based on the bar chart, based on the moving average, which is like 20, 50 or MACD, whatever that you want to use. So you try to identify a bottom or top which is very closer to that. Now that is what we showed in a daily chart before for identification for a big up move, which is what is very important investment decision, which will show in a daily chart as well as in a weekly chart. But right now, in order for trading purposes, okay, particularly for Nifty and Bank Nifty, we said that look at the hourly chart, we look at the 15-minute chart. Now, just based on the breakup on the upside of a 15-minute chart, a pivot high break or a pivot low break, you can either go long or go short. Now that in the 15-minute chart, you will get at least 2 trades in a day or at least 1 trade in a day. In an hourly chart, it will be less. It will be only, say, I would say once in 3 days or once in 4 days. So you may get only some 5-6 trades in a month. So, but then the stop loss can be a little wide. Okay, so depending on what type of trader you are and how fast you can execute trades, what are your charges, that will decide now whether you want to go for a 15-minute trade or 1-hour trade, and which over a period of time can produce the same result in terms of profitability, but not in terms of the number of trades of success and loss. Because if you go for a bigger time frame, the percentage of trades, winning trades, will definitely be higher because it is less choppy. But if you go for a lower time frame, percentage of loss making trades can be more, but it will be overall will be quite still profitable. Okay. So now these are the illustrations that we showed for the you can use this in a daily chart also. So let us say in hourly chart, Tata Steel. See now, if you look at hourly chart, this was a 50. This bar was formed above the 50. Below the 50, it has come. So now it's a very clear case that it has broken down. So it is in a clear short position as far as the hourly chart is concerned. So what we need to wait is, we need to wait for this to go. Now 20 moving averages above 50. So in those cases, we need to wait for a rally up to this. Okay, up to this. Then once it starts cutting above this, okay, if it starts sustaining above, then in that case we can look towards on the long side. So right now, tomorrow if you ask me, general trade is the Tata Steel can be a short close to 1380. Can be is a short trade which is closer to 1380. So around 1380. So as a trader, I will prepare myself tonight that if I have to go short on Tata Steel at an hourly time frame, I should look at the rally towards 1380 levels. And closer to 1380 or slightly above 1380, if a pivot high is formed, then I will go for a short. I will go for a short based on the hourly time frame. At the same time, if you look at the 15-minute chart, I think in stocks, 15-minute chart, you need to be very careful because it can be very choppy. And here the 15-minute chart, the 50 moving average is coming closer to 1375, which is what I showed you in the hourly chart also. So I will definitely wait for a formation to take place about 1375, 1380. Now here also, if you look at the on a 15-minute chart, just look at this. Okay. Now if a pivot low is formed, so somewhere this is a pivot low is formed. So here you could have gone long because sometimes market could have gone just above the, like this. So this is a pivot low. Okay. So this is formed, and so you can keep this as a stop loss, and probably an entry would have got at 1402. And 1402 you would have put a stop loss at 1382. First trade long, then it is exited at 1382. Then 1382 you will go short because now it is a break which is below this 50 moving average pivot. Okay, a pivot below 1382, and that is carried to 1343. Is around 40 rupees profit minus 20 rupees initial loss. So you would have got still a 20 rupees profit today. Still you would have got a 20 rupees profit on 19th. So okay, this is a trade. This is on 19th. right? So you would have on 19th probably you would have, yeah. So 1368. So net and net probably on that day you might not have made a loss because the initial loss is equivalent to the profit in the second trade. So you would not this one. So but after that today you could have continued the short position from 1367 and no, the trade continued for 1344. Another 20-23 rupees profit you would have made. So overall, if you prepare yourself for tomorrow thing, then Tata Steel just wait for 1380. So good chance that no, around 1380, whether no, you should look for going for a short. Okay, in the case of Tata Steel. Now, along with this, you can use your pivot point trading formula. Now you know about this. 1380 is going to be somewhere a very important place for going short. So here, if you draw your pivot high, pivot low, and give you the R1 and R2, you can look towards first earmarking that place where if R1 comes closer to 1380, you can be keeping a watch that no, around this place probably all things gel for a short position, and prepare yourself for a short position entry at that point of level. Okay, so this is how normally you trade it out. Let us look at the Reliance share on a smaller time frame now, because the bigger time frame you are going to get across on day after tomorrow. So now a smaller time frame, definitely a break below this because this is a pivot low below the 50 moving average. So I think we are this is a short position today. I think yes, today it was a short position. It came because of a break of this. Okay, and now the short position trade continued. And in the bar chart which I showed you before that, so this is a this low formation clearly shows that this is a low which is lower than the previous low, and this top is also a lower top. So the moment you get this, then you are going to go for a short position here itself, and that short position on 15-minute trade continues. So you can choose one type of system which you want. Either you can choose that I need a pivot which is below the 50 moving average, and then I will go for a short below that. Okay, you can keep it like that, or you can say that I want a lower top, lower bottom type of chart in a 15 minutes or 1 hour, and I will use that. So whichever way you do it, it will produce profit. So now the same Reliance in a 1 hour chart. Now say Reliance now has come below the 50, right? This is the 50 on a 1 hour chart. Now what's going to happen as far as Reliance is concerned is, now this is a pivot bottom that is formed because this low, look at it. So this is a pivot bottom. So if Reliance now is, you can say probably is on a if you want to pick exactly the bottom, now chance that you have now got a bottom. Okay, either it has to go up from here, or once this is cuts, then you will have a you will have a sharper fall. So this fall, this is 2692. So on an hourly chart, you can keep 2692 as a stop loss. You can keep 2692 as a stop loss, and probably you can be on the long side. So tomorrow morning, if there is some movement on the upside, then you can look towards going long, keeping 2692 as a stop loss, keeping 2692 as a stop loss. So this is how you probably look towards but there can be some hit towards 2720, 2720, 2122 levels and all. So if it starts above 2720, that is, it sustains little bit about 2720, falls and then takes above 2720, also you can go for a long. Right now, if you are going to try to pick the bottom, you should go for a Reliance with 2692 as a stop loss. You should go for a 2692 as a stop loss. And suppose if this is going to be broken, 50 moving average, normally it can come to 100 moving average. So let's draw the 100 moving average and see where it is right now. Next thing will be an 100 moving average here in an hourly chart. Okay. Now, chances that if 2692 is cut, it can have a fall right up to 2642, 43 levels. So any short below 2692 can carry itself right up to 2644, 45, and there again if a pivot bottom is formed, you can look towards going long. So right now a pivot bottom is there below the 50 moving average. If you want to use, if anybody who is going on the long side should keep 26.92 as a stop loss, and if there is a fall below 26.92, just look for 26.45. And Reliance can first get itself 27.20, 21.22, struggle a little bit, and then once it starts to break 27.22, 27.25 in a sustained basis for some time, it can be a long trade with 26.92 as a stop loss. So this is how you normally position yourself for a trading, by preparing, by seeing the chart and preparing yourself the previous day itself as to what are the points that you need to look at it. Okay. So this we will apply again for investment decision on Friday. So now questions please. Thank you. So thanks for your participation. See you again on Friday. Thank you very much.